George on? Good
I'm
morning.
here just trying
Okay.
to clean up some of these note takers that are not human.
Where do those come from?
Just different people put them on and don't, I have to take them off,
Okay.
at least as far as I know how to do it.
hmm
I'm not the Zoom specialist like Mark is.
I'll be right back on.
All right,
I
come back.
didn't realize that today was a holiday, Juneteenth.
Juneteenth. Yeah, your bank is closed.
Good.
Yeah.
I'm kind of glad. Stop
Well,
depositing checks. Yeah.
excuse me. So yeah, we're just gonna do because it's a holiday, we're gonna do a light Zoom session today. Is that good? Light. Speaking of light, there's Frank.
How's it going? Also brought one of the co-founders of Metafide, Matt, with me here.
That's great. That's great. Thank you. Hey, Matt. I wondered who that was.
Yeah.
Yeah, and I'm kind of jealous. Mark and I kind of jealous. Look at all that stuff hanging out of that hat.
I'm not jealous. I got
Oh,
the upper
yeah.
hand.
Matt's
Not with
gonna,
that.
if you're not careful, Matt's gonna rip off a guitar solo from a glam rock band.
Oh, really?
No,
Interesting.
Can you hear me all right? There you go. The microphone
Yeah.
wasn't working at first.
yeah, we're good.
Yeah,
You have more hair than I do.
Now you got some nice hair yourself. Good to see everyone.
That's pretty funny. Where's Dennis? Oh, well, I'll text him. Um, Hello. Welcome to the longest running crypto conversation in South Carolina. Been going since, a few years ago. And we meet every Friday at 9:30, except on certain holidays like July the 3rd. I think we're going to skip that one.
Okay.
So
Take a
everybody can
break.
so everybody can get out of town and do their thing.
Yeah, the big 250.
Oh yeah, man. I'm just hoping for a boat parade in the intercoastal waterway somewhere. Because I'm gonna be on the coast. I hope.
So where are you located now?
In Columbia. And you're in Illinois?
Yes.
Okay.
Yeah.
Land
So
of Lincoln,
Columbia, which
South
Columbia?
Carolina. Yeah.
South Carolina.
South Carolina. I was stationed at Shaw Air Force Base for a couple of years.
Excellent.
So we had a good time down there. I love South Carolina.
We did too. And we want to keep it this way. So
Well, I heard Nancy Mace didn't fare too well.
she will be
No.
retiring from the House. Her seat
Yeah.
is, I don't know who's, well, they had the election, so we don't know who's in that seat. And then she'll not be running for governor. So I don't know what she'll do.
She'll figure something out.
She's got a good TV
Not good
program.
lobbying. She could be a
Oh,
good
God.
lobbyist.
Yeah.
Yeah.
I cannot see her hanging out with us in the lobby, but some of those legislators do behind the scenes stuff. She could do stuff in Washington. I could see her in Washington
Maybe
being a
so.
lobbyist. Yeah, not South Carolina.
And she's
All right,
probably got stuff already lined up.
probably.
Yeah.
Yeah.
So let's see.
All
I'm just
right.
trying to check and see if I'm gonna let me text Dennis
Well,
while I'm
and I did invite Mike Chance, is somebody I work for. He's the vice president of governmental relations, and he's the sustainability officer for Ingevity. That's in North Charleston. And now he did go to Brussels, so I don't know if he's going to be on today, but I did send him the link. He was curious about what we do.
Well, thank you.
Yeah.
I am too.
Okay. You want me to go ahead and get started?
Sure, sure. It's a few minutes after 9:30, and that'll be great.
All
Yeah.
right. Well, I tried to think of one word to describe the last 5 days, and whipsaw is what came to mind, because the market will go down 4%, and then the next thing you know, it turns right back around and it's up 2%. So it has been extremely volatile. And I think it started ever since last Wednesday when Trump tweeted that there was a resolution to the Iran situation. But overall, all of the indices are up. So the Dow is up 1.01%, 519 points. It's at 51,842. S&P is up 1.21%. That was only about 90 points. And it closed right at the 7,500 level. I wrote down its high is 76.20. So we'll see if it can get back up to that. The NASDAQ was up, it was the biggest winner, 2.85%, 734. It was the one that swung the most. And the memory stocks are the ones that lead it up and lead it right back down. So it closed, I'm talking about the composite, 26,517. And it's only down about 600 points. Remember, the high was 27,190. The Russell fared well, 1.67% up, only about 49 points. So it's still below the 3,000 level at 2,979. Now, gold and silver have been terrible. So gold is down 1.34%, $56.50. And I checked it this morning, and it's going down again. So I don't know what's up with that. Maybe other countries are continuing to sell. I have no idea, but it's doing terrible. It closed yesterday at 41,062.60. Silver, it was even worse, down 4.15%. It's only 2.82 points. But remember, it was hovering around 80, and now it's at 64.96. The dollar strengthened. And I should say that a lot of volatility around Wednesday, which I'll get to, was the Federal Reserve. So the dollar shot up. It's up $1.04 since last Friday. So it's above 100. It's 100.796 this morning. The 10-year shot up. It's at 4.455. It went to 4.66. But as Warsh was talking, it went up to 5.2, but it didn't stay there. WTI dropped. So oil prices are down $3.84 since last Friday. Last Friday was $80.76. Now we're at $76.92. So I'll just run through some economic news. So SpaceX IPO, I guess they would consider was a success. The set price, it was supposed to start at 135. It actually opened at 150. It had 3 days of upside. It went crazy. It went as high as $225.64 on Tuesday and then dropped. So for the last 2 days, it's gone down, and it closed right at 185 yesterday. Tuesday's manufacturing numbers were not good. It only increased 0.1% versus 0.3%. So that made a dip in the market on Tuesday. Manufacturing output was unchanged. I won't go through all those numbers, but I guess the big news on Wednesday was it was Kevin Warsh's first meeting and first press conference. So when he spoke, I guess people took it as hawkish. He is not going to give forward guidance, unlike Jay Powell, and he's told his FOMC members, keep your mouth shut. remember under Jay Powell, they were constantly talking and giving press conferences and this, that, and the other. And so they're not going to be allowed to do that, thank goodness, anymore. And on the dot plot, Kevin Warsh didn't even put a dot on the dot plot. I didn't write down all the numbers, but there were a number of people who, maybe 7 members, who think that we should increase rates twice, and one group was 3 times this year. So overall, it was a very down afternoon. The market sold off, and it looked like it was going to stay sold off until yesterday, and the market shot right back up. So
Yes.
yeah, so
Crazy.
that was interesting. So we don't know if we're going to get rate cuts, and that's what Trump expected him to do. But because the economy's good, and he said housing market and inflation for regular American people is tough, we're going to stick to our mandate, and no more information is coming out after our press conferences. But they'll meet in 6 weeks, and we'll see again what happens. And then I just wanted to note, on Tuesday, Bank of Japan raised its interest rates again. This is the highest level in 31 years. That goes back to August 1985. Yep, 1985. So it went up another 0.25%. It doesn't sound like much, but they're up to 1% right now. And this is the 5th hike that they've had since March 2024. So anyway, I'm worried about the yen, Japanese yen trade. The yen just continues to weaken. It was like 161 yesterday. That's all I got. Yep.
Well, thank you. I did catch when Kevin was doing the press conference that he was going to develop some new matrix to
Yes.
look at how the economy is progressing. And I'm not sure, he went through several highlights, but one of them was, I think, jobs and performance or something. But anyway, I think there's 5 of them. I think that's what I call it. God, I can't believe I remember that. So I didn't
Yes.
write it down.
You want me to run through them?
Well, sure, if you just highlight them.
Okay. Communications strategy, how they'll communicate with us, the balance sheet policy, and risk to the reserves, existing data sources,
Right.
improving the Fed's real-time economic data gathering, productivity and jobs,
Jobs. Yeah.
and inflation frameworks.
Okay. Well, we'll see how those look, I guess. That's really exciting, Patty. Thank you so much.
You're welcome.
No, that's great.
Yeah.
That's great. Thank you. And let's see. Are you holding neutral right now on um, SpaceX? I mean, you're just going to
I
hold?
sold out. I
Oh,
only
okay.
stuck with it through Tuesday. I was like, that's enough money for me. I got out. I just feel like it's going to go down. And so much of, if you watch CNBC, they are very focused on the lockup periods that are going to allow early investors, IPO investors, to sell. And I think that's just going to take the stock probably below 135 by mid-December. So I'm just going to wait. I did sell puts on it, and I didn't hold
Okay.
on to those more than 10 minutes because it was so volatile. I was like, okay, enough for me. Took my little profit and got out. So, yeah, they were very quick trades. Yeah.
Well, gosh, there's a lot of things going on out there in terms of and appreciate some of the new folks being on the call today as well. So we'll introduce some of those in a minute, but I want to get to Aaron to give us a little update on what's going on in the crypto world and
Yeah.
who's doing what and
Hey,
Positive
morning,
news,
George.
please.
morning.
Not really, just kind of gray news, I guess. Market kind of seemed like the dust settled from last week. Saw some movement around the peace talks, but nothing really substantial, kind of that sideways, boring chop. If I was buying any spot positions, I'd be waiting for really that wick down that I think is inevitable, down below 60, and kind of take it from there. But overall, it wasn't too exciting. Alts were kind of steady with Bitcoin as well. So nothing too crazy that I saw. I did see some talk about an anti-AI trade, which I know I mentioned last week about Pokemon and how the prices of different cards and collectibles are going up. But as far as actual like cardboard and collectibles and trading cards, that anti-AI trade is kind of gaining more popularity. So I
Interesting.
guess hold on to your old collectibles and valuables at this point, as they incorporate it into, even on chain with the different. It's like a claw machine essentially, where you put in 150 USDC or Tether, and out comes a Pokemon card that you can get mailed to you or sell it back to them or just kind of hold it on chain. So it's kind of interesting how they're bringing some of that off chain on chain, but that's growing in the amount of volume and a lot of the projects that are growing in this kind of sideways market, at least on Solana. Um, so it's good. Everybody's focus is kind of shifted off of it, which is typically a good time to start doing research and making some buys down at this area. But I'm still eyeing that quarter 3, quarter 4 for till we return to, hey, crypto's good again. So, but
Yeah.
that's all I got. And I got a contractor coming here in a few minutes, so I'll have to hop off,
Sure.
George.
Aaron, thanks as always. Appreciate it. I did want to just give a couple of highlights. One is it's Eleanor Tarrant, I think her name is. Um, there was going to meet. There were a number of crypto-centric people. This is on the Clarity Act, and there a number of people they wanted to build support for getting the Blockchain Regulatory Certainty Act, key yet controversial proposal or provision in the bill. It would clarify that certain non-custodial software developers are not liable for how third parties use their code unless they knowingly intended to facilitate illicit activities. And a couple of people on this call have mentioned that particular um, they need some cover for that. I think Doug Morton, but I think Les, you were involved in that too, weren't you? Didn't you understand the impact of having some sort of cover or immunity from developing software, and you
Oh,
don't have
sure.
control of a third party how they use it?
Otherwise, you end up in prison in Amsterdam.
Yeah, like the
Oh,
Tornado Cash guys.
Hmm.
Aaron?
Yeah, hey, I forgot I did have one interesting I guess fact or this week it was Illinois, I believe, passed some legislation that or I don't know if it's actually in effect yet or it's supposed to go in effect, but the main point that stuck out was it was like a 0.2% per transaction on crypto transactions, and that would even include transferring assets from one of your wallets to another wallet. So in
Interesting.
comparison, it'd be like taking money out of your right pocket, putting it in your left pocket, and you get taxed for it. So I thought that was pretty
Sure.
funny.
So we
that is
have someone from
terrible.
Illinois with us on the call. Mark is from Illinois and knows a little something about this. Mark, can you enlighten us a little bit?
I sure can. It's Senate Bill 3019. Okay. And it's also in the state budget because they expect to pick up about 60 million off of this tax. And one of the things we had done when we were over there, and of course they brought it up as a surprise.
Mhm.
This state is entirely controlled by Democrats. All the constitutional offices, both the House and the Senate, have super majorities. So they bring stuff up at the last minute without discussion. It was pretty clear that Senate Bill 3019 was written by somebody who had never dealt with the crypto world before.
Mm,
So so it's interesting watching the different things. In terms of accuracy, it was 0.2%. So what that means is, $2 out of every 1,000 in a transfer. Okay.
Mhm.
So we're trying to figure out, well, okay, what's the impact on the day traders and those other investors? Yesterday we met with some of our friends on the Hill. In Illinois, we really don't have a hill, but up under the dome, and
Amazing.
they're going to introduce a legislation to repeal that this fall. Okay, we have veto session that comes up in November. We're also looking at establishing a political action committee at the state level. We already have one at the federal level. And so we're also looking at really organizing. Initially, when we went over to talk to them, we were talking about some good government programs like helping the poor section of Chicago called Altgeld Gardens. They had a conference in August that had over 150 people at it. It was phenomenal. Brought people in from across the country. And what they wanted to do was set up scholarship programs and set up jobs programs or vocational programs using a Bitcoin reserve at the municipal level.
Mm.
So we were all in favor of that, right? So we turned around and all of a sudden, Governor Pritzker, who hates any of the Trump initiatives, was
Yeah.
opposed to anything dealing with AI, opposed to anything dealing with digital currency, and was basically um, uh, because of his opposing, the Senate Democrats didn't want to do anything with us. The House, on the other hand, we were very popular. So it was interesting, the dynamic there. But it ended up what passed really was not attached to any beneficial programs. So we're looking at this as just a pure money grab
Mm.
and a way to control cryptocurrencies and essentially kill cryptocurrencies in Illinois. So,
God,
yeah.
I totally agree. Aaron, did you have your hand up again?
Yeah, I just kind of a two-part question. My first question would be, I guess, how do they enforce it? And then the second part would be if it is self-reported, um, or you're supposed to report it on your taxes or however. I mean, there's multiple people that are. I myself do, sometimes 100, 200, transactions a day.
Right.
And as crypto's evolved, a lot of the simplicity, since 2018, they've made it easy for the retail end user to where the transactions happen without them even knowing how
Yeah.
many transactions are actually going on the blockchain. Say if you switch from this currency to this currency across two different chains, you may have 8 different transactions,
Right.
but at face value, you're just doing that too. So I guess the question would be, is there actually a realistic way to, monitor those transactions and enforce that tax?
Um, our vision of it is no. They are going to have to, the devil's in the details. We have what's called a Department of Revenue here in Illinois that handles all the state taxes. They're the ones that are going to be responsible. But we believe that whoever wrote this legislation really did not understand cryptocurrency at all and what the possibilities were and the number of transactions that can be done. Like you mentioned, 8 transactions all in one, push. So, we believe also that because this crosses state lines, it's unconstitutional. So we have a meeting this afternoon at 4 o'clock
Interesting.
to talk about legal action. I'm going to bring up the political action committee stuff because that's where I think we're really failing. We just, you have Lightning Network and Strike here in Illinois, right? But most of the other vendors, although we did just had a Solano conference, so that was phenomenal as well on Tuesday. So you have some players in the state, but there really wasn't much discussion about how do we go about opposing or repealing this legislation. We're just beginning that discussion. And like I said, we met once yesterday. We're going to meet again today. We're going to talk about legal action. We're going to talk about political action committees, and we're going to talk about organizing the state. We actually have in August 2 events that are coming up, one at the 1st of August, the other at the end of August. The first one is money people, and the second one is more membership drive type of thing for the Illinois Bitcoin Council. So we're doing a lot with a very small group of people. We need to expand that group. So,
And I see Dennis has got his hand up. Dennis, do you
Yeah,
have a question for Mark?
yeah, no, I just wanted to share with you. Obviously, this is something that obviously now potentially impacts every state and every state association. And for South Carolina, just to kind of bring it back home, to what we have currently in S-163, the bill that was just enacted in May, is that we have a provision in S-163 for tax neutrality, meaning that we can't make any, obviously, we're neutral on the, on how we treat digital assets in South Carolina. So, to guard against this, and
So,
as we
Dennis, you're
just said,
saying that 163 would prevent this kind of action as a tax
no,
on transfer?
no, it won't. It won't. I mean, that's my point. But so we have to be vigilant, that because I can guarantee you there's somebody in every state that is trying to figure out how to tax you
Yeah.
on everything you have. And obviously, this is a
Yep.
new asset that was largely misunderstood. And what's happening in Illinois is an example of when bad policy impacts new technology. So
Okay.
Bobby Shell called this out on Facebook just recently, earlier this week. Um, I weighed in there on the basis that, again, I mean, this is why we have a state association. This is why, in Illinois, y'all are organizing, obviously, looking at tax. I mean, we've certainly done the same thing here, and how we impact this, at all levels, really, and address it is, I mean, it's the future of tax. I mean, it's the only asset that's taxed this way. It's crazy.
Yeah.
Terrible. Yeah.
Well, let me do this. We got off a little bit. Well, that's a subject I definitely wanted to talk about some. Mark is with us from Illinois. Our friend Tim Nehemiah is the link between the two of us. Many of you have talked and met with
Tim.
with Tim, but or on the Zoom call met. But anyway, I just wanted to say hey to Mark, and he's also going to help us with the conversation that Matt and Frank are going to talk about because we've been talking about some Bitcoin. I'm sorry, we've been talking about some blockchains, and we had Reba and let's see. Keith last week's explain a couple of the blockchains, but wanted to because Frank uses a blockchain for his business, and I wanted him to sort of tell us a little bit about what he does and why he picked the blockchain that he uses and what it's done for him and the utility, et cetera, et cetera. And then maybe Mark would join in with some takes and some expansion of the conversation, and then we'll wrap it up with a couple other crazy things going on, like Bernie Sanders. But we'll discuss him in a little bit. So, Frank, are you and Matt ready to sort of give us a highlight of what you do and what blockchain you're using and what your product does and how you transact it?
Yeah, sure. We at Metafide, we have a predictive games where people compete to feed alpha into the system. So you get rewarded for how early and how accurate you are at predicting the price of an asset like Bitcoin or Tesla or Nvidia or something like that. And by being the earliest and the most accurate, you get a greater share of the distribution of the rewards in that game. that all happens on a blockchain called Base, which was the Coinbase offshoot, right? And what we were looking to do is we were looking to have something that was, ERC compatible, that fit in with the existing Ethereum infrastructure, and that would allow us to interact with a bunch of other sources of liquidity and tokens, to even be able to pull them into the game and convert them pretty easily without having to bridge across. There's a lot of problems still in crypto infrastructure with bridges. A lot of the hacks you see, and Matt can add a little bit of commentary to this. Our personal, our opinion is that most of these bridge attacks are inside jobs. Where if you expose them to, anytime, like the promise of crypto, what's so good about it is you don't need to trust me in order to do business, right? You just have to trust math, right? And then what the bridges did is it introduced the element of, flawed people back into the equation, and can you trust people that the software that's not blockchain that was going to bridge it across, right? And it's not foolproof, and therefore that's the weak link in the system. And we were looking to give us something that low transaction costs, low gas fees, quick settlements, and allowed us to the greatest chance to access the greatest number of tokens, in the pool. But I'll say this: I don't think it's been a great choice. It's a good choice infrastructure wise, but Coinbase and Base has kind of let down the community. Where it's kind of like the same problem that Google has, and why Google can never launch a social, product, because it competes directly with their major lines of business, right? Where Coinbase sees what's going on the Base network and the developers, and instead of saying like, okay, we can grow that infrastructure and grow the innovation there, and then look to partner and integrate it with, it's got shareholders and it's publicly traded, so they see good things going on there, and they're like, well, we're going to pull that into our ecosystem. Do I have that right, Matt? I mean, that's probably.
I would say that's true, but also part of it is that crypto's always suffered from a fragmented liquidity problem. Ethereum came out as like the first one. They had the liquidity, you could build applications on top of it. They had the security, but the TPS wasn't there, and it was expensive to transact on that network. And ever since then, crypto's had this problem where they chase this shiny penny of there's a new layer two out there. It's bigger, it's faster, it's stronger than the last one, and they attract a bunch of liquidity. They get a bunch of VCs to go in there, pump the token price. They use the marketing to create a really good narrative, and then everyone moves into that new L2. And it's like, okay, how long can this L2 last before it suffers the same problem that each one of these other ones does? And eventually, what happens is a new competitor comes up, spins up the same story, and again, the liquidity becomes fragmented. And I think for us, we saw Base as possibly putting an end to some of this because we trusted more of Coinbase and their reputation to create a good network out there, put together a good fund, attract the right developers, and, have this long-term outlook. But it seems like it's kind of an issue where you just dump, unlimited amounts of money into it, and you can't really get the retail investors and the applications to stay because someone always puts up some better offer and creates, what they call like a vampire attack. And, crypto's really never been able to mature past that point right now. And we're stuck in the same place we were back in 2019.
Yeah, and I would just say the great points, Matt. I would just say we're never, as crypto investors, like I know I've been involved with Bitcoin since 2010, right? And
Wow.
I think some of the things that you brought up earlier on the call, they're winding down the gold-backed stable token at Tether in favor of Tether Gold.
Right.
That probably had a little bit of a price impact on gold. But I think also what that tells you is part of this problem that we're talking about here, where like there's so many conflicting interests right now that until there's a uniform way to transmit liquidity that doesn't penalize you and works within the system, investing in crypto is just going to be trying to catch you're basically a surfer. You're just trying to catch the next wave in, ride it, not get wrecked, get back out there, and then catch the next one. You double dutch in and out of the market right now, and that's what you do it. The promise of building a new economy from somebody who's been building in it is not there. Like, and what you're seeing now, Matt and I were down in I think maybe Dennis was too. We were down in the consensus conference in Miami at the beginning of May. And what you're seeing now is, all the innovative builders that were trying to do things, they're getting blocked out because their VCs were, less than effective managers of capital is a gracious way to put it. And all the big banks are coming in now and just realizing, well, I'm gonna take the money transmitter function, and I'm gonna take the way to backstop the critical pieces of it, the parts that are definitely going to make money when the banks switch to at least split their business when they have to, when clarity comes through between Swift and the new way to do it. That'll be the new economy or the new crypto economy. But all of the like the libertarian resistor rebel thing, like that's basically dead. It's like the Jedi at the beginning of episode 4, right? Like that's kind of like where we are in the in the story arc. So we're just a bunch of ragtag rebels like fragmented across the universe, and I think hopefully when clarity passes, the L2 choice and which one you pick, I think that needs to be replaced by people owning applications that innovate the financial system, that bridge across chains, or not bridge across chains, but manage liquidity from multiple sources through smart contracts, and get away from this, like L2 competition. I mean, the fees on ETH have come way down. They see the writing on the wall.
Yes.
And I think it's just one of those things where if you can get to that and then start, like, we were talking about the problem of bad policy. Dennis said it exactly right, right? Bad policy impacting, the markets. They can innovate around that through making smart contract things that manage it outside the jurisdiction of Illinois, and they're not going to be able to keep up with once this barn door opens. Like they're not going to be able to keep up with the innovation that comes there. But it'll be the banks versus us, and it'll be like the Oklahoma land grab where you have to run out and grab your place and then defend your position. Like I think that's where we're at in the market. And I'll just say one more thing before I stop rambling, which is I think Bitcoin's got a long way to drop. I think the Warsh update yesterday is going to crush the market. I think all the banks know, and we know these people. Like I think the bankers and the institutionals know if they keep shaking the tree, they're going to get all of the Bitcoin that they can out of retail with one last grab, and then they're all going to ride it up together. So I'm not selling,
terrible.
but it's terrible. But I would bet a leg on it right now. Like I think it's gonna happen. So
this is
just
not
be careful
financial
out there.
advice.
Well,
And Frank, I mean, don't you think the lack of having standards, in this industry is part of the problem? I mean,
You
even
mean
just
you mean
in
technical
creating
standards or the kind
yeah,
of people you're willing to deal with?
both,
Because I think
both, quite frankly,
yeah.
yeah. I mean, because obviously, I mean, you can have the killer app, and one of the things that was brought up last week at the GBBA conference is that you got 4 or 5 different companies that have a solution for a bill of lading, for shipping purposes. Financial transactions that aren't monitored. I mean, quite frankly, and think about all the goods that come in logistics and shipping and containing, but at the same time, none of them talk to each other. I mean, so you don't have a common standard even at the application level, much less at the development level.
Yeah, everybody went after quick liquidity to cash in, cash out, pull things out instead of building those things. And like Matt said, I think it's charitable to say we're 29. I think we're right at the 2017 phase where we're right back there. Um, Also,
Interesting.
one other
Yeah.
thing, because I know these are my people here, right? Like on this call, I would just what I think we should also do is reframe this whole mining data center thing. I think everybody's so fixated on what they think data centers are doing, which is they think they're data collection centers. Like that's what I think people are afraid of. That they're going to get all this information on me. They already have that. They built that during Bush and Obama, right? Like
Right.
the the data collection center thing. So we've been calling them compute clusters, like because
Yeah.
that's what's going to be valuable. Like, and every time I talk to somebody, I don't say data centers. I say compute clusters because if people are worried about them collecting data on you and storing it and using it against you, they're correct. They already are doing that.
Right.
That's what the NSA's job is. I
Well, we
think
could go
in
down. We're
conscience.
going to go down that hole in a couple of weeks. Actually, Dennis and I are having that conversation. He's got some thoughts on that, privacy, data collection, etc. And we're going to try and scare that chicken out of the hen house there, so to speak.
Yeah. Yeah. Well,
It's
thanks for having me on. Thanks for letting me speak.
no,
Appreciate it.
no, thank you. And I wanted to maybe ask Mark if he had anything to add to that. I know he's heavily involved in a number of different
Sure.
aspects of this.
Initiatives. So much of when I was at the Pentagon, I was working on blockchain and machine to machine learning projects relative to drones and hypersonic missiles.
Hmm.
And so then when I retired, I took a course at MIT dealing with cryptocurrency because I saw where we were heading towards where everything is going to be tokenized.
Gary Gensler.
Gary Gensler was one of my professors, and fortunately, I had another professor that said the opposite of everything Gary said. Right? So, it was an interesting. My timing couldn't have been better. So I'd have to say that everything that Frank was focused on is right on the money. I am not a believer that they are collecting all the data that they can possibly collect. I think that there is more continually to collect as they move down a path of trying to control us more.
Mm.
And we really experienced that here in Illinois versus when I was down in South Carolina, even during COVID, it was you were open down in South Carolina, pretty much after 3 months of COVID, you then opened up, right? Well, here in Illinois, they didn't open up for a year and a half. And that gets back to the whole discussion set of what do state and local governments do to their people. And like I would come back here to Illinois to visit family, and the restaurants would still be closed, and they'd be, restaurants would be open in South Carolina, and I drive through Tennessee and restaurants are open. And here in Illinois, they had churches closed. You couldn't have a wedding, you couldn't have a funeral. It was horrible. So one of the things that started me on this path was that we really need to have in place a digital Bill of Rights at the congressional level. And the digital Bill of Rights really needs to focus on finances, and it needs to focus on having a court system that can rapidly hear cases because they can box us in very quickly. Okay. And that was what I was working on basically at the Pentagon, is not financial systems, but how do we respond quicker? How do we do decision platforms that help military members respond quicker? And we were successful in our first day of testing in July of 21. We were successful in having no men or women in the loop, in the decision-making loop. So the detection occurred, it sent it to a computer program
Yes.
that then made a decision. It then sent out an order, and it launched whatever weapon system we were using against the enemy. Okay. And it all happened within seconds. And then we also tested AI, in which we had a man in the loop that could monitor the decisions to make sure they were accurate and could stop it. And those of us who dealt with nuclear weapons, and I did that, I was on B-52 bombers back in the 80s, wanted to have that capability so that we could stop a bad decision by, by AI. So how does this tie into what I'm doing now? Well, last Friday, I was over talking in St. Louis to a group of wealth managers called IPI, Wealth Management. And they're mostly an Illinois firm, but they have some nationwide aspects. But they're just now beginning to think about the things that you're already pursuing. And it's being driven primarily by the Clarity Act. They know this is out here, but they don't know how it ties in. They don't understand Tether, right? They don't understand real world assets and how they can be digitized. And even though they digitize stuff all the time, right? they don't, it doesn't, it's not viewed that way. Just because it's on a computer doesn't mean it's tokenized, doesn't mean it's digitized. So
That's a good
I
way to put it.
share. I think what Frank was talking about was really right on the money in so many aspects. Banks versus us. The more I dig into digital cryptocurrencies and digital assets, the more I realize that the banks are really kicking our butts on this issue, and particularly, the Vanguards of the world and the Chases of the world. The venture capitalists are really have control institutionally of what's going on, and it pushes out the innovation like you were talking about. And so that's where I think we really need to start focusing. And so just like what Frank was talking about, the bridge, and trying to do this stuff, how is innovation tied into the financial realm? Because that's where they're going to box us off initially. If you watch
That's right.
what China did,
Mm-hmm.
that's my fear, okay, in terms of digital IDs, clamping down on if you don't have the proper social score. We are already digital animals, but it's scattered.
Right.
Okay? It's
So,
scattered in multiple different areas, whether it be
Yeah.
education, finance, employment, medical. It's scattered, but they're going to consolidate all that, right? And so that's the problem set that I think we have. And I don't know who mentioned I apologize. I don't know who mentioned the compute clusters, but yes,
Right.
they are compute clusters. And I think down the road, and I'm glad you're going to talk about it in a few weeks, we have to look at private AI servers at home. We have a guy here in Illinois that'll do them for 15,000. It collects your own data, and then we have to look at privacy measures so that we're not constantly out on open source. Okay,
That's
how do
unbelievable.
yeah?
Yeah.
So
Can I
Mark,
chime in on that?
So yeah,
absolutely, yeah.
Because
but let me just do this. This is recorded, and I hope everybody's okay because I do put it on my YouTube channel. So just, just if you got an issue with that, let me know. You got my email or my text. So, but This is a fascinating conversation. Patty, you got the floor.
I just wanted to chime in on that I've heard that the Apple Mac can do AI and compute, as you were just describing,
Open
Mike,
cloud.
that you don't need, you're not depending on the cloud at the data center. You
Right.
can do this.
Mhm.
Okay, and so the question came up in a conversation I was listening to is, are we going to need all these data centers if people figure out that it's going to be easier to do all of that on your own
Yeah, it's
computer?
not, but it's not about you. Like
Right.
this is the
no.
That's
this
right.
is the problem. Like people will do things like analyze, OpenAI's business, and yeah, I don't think OpenAI can raise the money they need based on their finances, by the way, but that's a different. But when they do it, they go, "Oh, look, OpenAI is, $1 trillion short on earnings." That's because they're calculating their earnings based on their income or their projected income from how many users they have. And almost no businesses make money on you and I. It's just extremely rare. B2C is not a good idea. All the money's in business to business, right? Because businesses have a lot of money.
I was thinking more about the electricity usage.
Yeah, but those are the AI transactions and transfers and calculations and training that require a data center, and you can't do on your Mac. So
you do need a data center. Okay. I thought it was trying to show, hey, we may not need these data centers because you could do all of this on your own computer.
No, we don't. Regular users like you and I probably don't comprise 10% of all AI usage. I'd be shocked if it were anything like that.
Okay.
So the one aspect I think you're overlooking is the marketing aspect. So you're right that they're going to focus on business to business. It's institutional, organized, but it's marketing. We're a consumer economy. Their marketing, they have to use our data to substantiate how they're targeting for their marketing. Okay. So that's where they're going to grab all that. Okay. And that's why they were continuing. We've got here in Illinois what's called flock cameras. Okay. And they just pick up all sorts of information on you. And it was primarily designed for terrorism, right? And for protection. But it could be used for all sorts of things. And AI in general can analyze your pattern of behavior. And that's what they've been doing to us on Facebook and what have you. So
right. They'll do that whether we use AI or not, because they've been doing that for like 30 years. So that's not even remotely new.
Well, they're going to do it. Yeah. And I agree with that. For instance, the Democrats have been doing targeting and messaging against us since 2012 using AI.
Yeah.
General Flynn has a great book on this, but the Republicans weren't. So there are people who were doing this, but there are going to be more people doing it. And as AI gets into the business to business part, that marketing aspect is going to grow, and they're going to start messaging you to convince you need to buy certain products, basically.
Yeah. They're doing it quicker now. That's really all it is.
Exactly right. Yeah.
All right, Dennis, you want to chime in and let me, because I like to wrap this thing up 5 minutes ago.
Mark,
before we end, I want to say something about astrology.
Sure.
Mark, let me send you my Neuralink, so that we can telepathically communicate on this, because we are sponsoring a digital bill of rights. We've been talking about this for about a year now. I'm doing polling on Facebook right now. I've had over 10,000 responses to my polls. And really what I'm seeing here is that the narrative around data centers, all the negative input, also offers a solution with a digital bill of rights, because once you propose that as the solution, all of a sudden you have people that are uninformed and really don't understand what's going on, recognizing that this is a way forward, whether they understand it or not. Okay, so that brings up the bigger picture of what we're really arguing for at the Clarity Act. I mean, I ran an analysis yesterday on some of the statistics I've built, and obviously Clarity is all about. And I mean, if you were in DC, with Sam with Crypto, thank you very much for flying in and participating in that. Y'all did a great job. But what I realized from that effort is that the same guardrails that the crypto industry is looking for in with Clarity, okay, really could be magnified 1,000 times if we tie this to digital identity and talk about the need for clarity across the board, okay, because we are at this inflection point right now. And a federated model of identity is what we're advocating for. We're advocating South Carolina join the Utah initiative for state source digital identity. And just kind of wrap it up, we've got a conference in September 17th, where we're going to bring all this out as far as a policy that can be used in any state in the country, quite frankly. And I've posted a couple of things in the notes just to dovetail off the conversation of tax neutrality versus actually taxing. The short brief in the notes for that, a link to a Google Doc I just put together. There's also a spreadsheet of 17 infographics that we just released as really as education programs covering everything from economic development to self-responsibility on how your data is collected. Turn your smart TV advertising items off. Okay, you know, 5 questions that every county councilman, every individual that's trying to understand data centers or what's going on in the community should ask about these data centers. This all dovetails into our scale program and our peak program. Got acronyms for the politicians so that they can understand that obviously a consumer-facing policy initiative that addresses the externalities is very important. We recognize that those are important issues, but also we recognize that we're in a competitive race. For a technology that could change, that will change the world. I mean, I sat in yesterday on the CEO of HP at the HP event yesterday, and I mean, I realized I've been missing a large part of the conversation by not tuning in to the guys that are actually the hardware right now,
Right.
building the network. I mean,
All right. Well,
it's amazing what's going on.
Dennis, we're gonna start wrapping it up here. I didn't have time to really talk about the luncheon that we went to, talking about energy in America and national security. So we'll maybe cover that next week. And then, so here's what it's looking like. Next week we'll have a call. Then we're gonna not have one July the 4th weekend, July the 3rd. We will not have a call. We'll come back and then we're going to start, I think that's July the 10th, because the AC/DC concert in Charlotte is July the 11th. See, that's my marker
Got to do what you got to do.
For what's happening in July. But anyway, and then we're going to start developing this conversation about privacy, about personal identity, and we're going to focus on that, Dennis. And we want to focus not so much on 163, but we want to talk about privacy, personal identity, how you can secure yourself. We touched on that just slightly here. And it's been a
it is
great
all
conversation.
related.
Thank you, everybody.
It is all related. Let me take one
I
minute.
know it's all related, but
Yeah, let me take 1 minute.
it does get to be a big envelope.
Yeah, no, I really. I would just want to introduce Matab. He just recently joined the association out of Oklahoma. Has a fascinating project, real world assets, creating a marketplace for your tokenized real estate, and doing it in Oklahoma right now. So we'll get to that at another time.
Yes, sir. All right, well,
Okay,
everybody.
let me just say,
Yeah,
wait, I want to say one thing.
Sure,
So
Patty.
today, Chiron moved into Taurus. And so I was like, I wonder what that's going to do to the stock market. Yikes. Last time it was in Taurus, and it's going to stay there for 7 years. The Great Depression, 1926 to 1934, and then the late 70s, 76 to 84, we saw stagflation. So it is going to impact global markets, monetary structures, and investor psychology.
Look at the debt.
Okay. There you go.
When we talk about that. Yeah, look at
they won't talk about it. They won't fix it or anything. All right. Well, everybody, thank you. I hate to cut it off, but I'm going to put this on YouTube soon. And thank you, everybody, for being on the call today. Y'all have a great weekend, okay?
You too. Thank you.
Thanks, George.
Thank you, everybody.